All right, good morning. Welcome to another Wednesday edition of the Investing Systems Live Show. Today is June 23rd, 2021, and I'm back. And it's been a pretty interesting week or so that transpired since the last time we were here. And as you probably know, we had a little dip in the market. I guess you could call it a dip. I think maybe at one point we had about a 3% pullback. It was actually kind of minuscule in the overall indexes, but at the same time, a lot of stocks took pretty significant dips too, which is sort of interesting. And so, it's just kind of the nature of the markets, right? This is the indexes tend to hold together pretty well, right? And individual stocks, well, they you get a few percent down in the market, and individual stocks get slammed, and vice versa. So, and it varies. It just depends what you're talking about. There's some sectors are held up better than others. So it's been kind of a strange market. And of course, the thing that's been driving it is obviously the Fed, right? You got all these Fed speakers on a day-to-day basis, and then you had it was last Wednesday. We had the Fed announcement, right? And then Powell's testimony, and that sort of sent the market for a little bit of a downdraft. And then Powell was on TV again yesterday talking, and anyway, so I have this trend line drawn on the SPY, which fits really well, right? And so I leave this trend line on the SPY just for sort of a visual reference point, and I have it touching the two lowest lows going all the way back to the pandemic low. And you can see we came pretty close to it. That's a 50-day moving average. You can see the little sell-off that we had in between last week and this week. So let's see this day. This was, yeah, there you go. That was, I believe that was Powell's testimony day there. And so the market took a little bit of a downdraft, and you had like 3 days sell off. What's kind of interesting about that is if you look at some of these, like this sell off, that was about a 3 day sell off. Over here, you had three kind of weekdays or whatever, and then right back up. So the market has been extremely resilient. It likes to sell off for a few days, and then whatever caused the sell off, the market shrugs it off, forgets about it, and it sort of rebounds right back to where it came from. So that's what we're looking at here. Let me go over to the actual SPX. SPY is great and all, but the SPX kind of is what I follow in my head. And so, I mean, the S&P index is like right up, essentially like right up at the highs. If we get any upside followed through today, then it'd be a new closing high. So there you can see, it was actually, well, I wouldn't consider this to be a sell-off day. It was basically in the range of the previous day. There was an intraday high, but this was the day that Powell, or that the Fed announcement came out, and Powell did his little press conference, which was interpreted as a little bit hawkish, right? And then, over the next few days, these Fed speakers, they kind of walked it back a little bit, and so the market rebounded. And the whole thing about, we're back to this thing like, geez, it was like 2013, 2014. The Fed was doing QE and all that, and then they would talk about the timeline for tapering. So, there's going to be like the taper of Fed asset purchases, and they're talking about, well, I don't know. I mean, the timeline for that, there's the taper, and then there's the raising of interest rates. And so they've already said that that's not coming until 2022 or 23 or whatever. But, the inflation numbers have been hot, and that's what all the consternation is about, and that's what they keep talking about on CNBC, obviously, and obviously, I mean, everybody's seen the inflation at the grocery store and a lot of other stuff, and yeah, I mean, it's a strange sort of environment. So Powell promised yesterday that it's very unlikely that we'll see 1970s type inflation, and which I don't really remember myself, but let's hope he's right. So check it out. The Nasdaq this morning has hit another new all-time high. This is actually the Nasdaq 100, but I believe when they talk about the Nasdaq, they're talking about the Nasdaq Composite Index, which has hit another all-time high. So there you go. Um, yeah, look at that move. Look at that move off the. There's the pandemic lows last a year ago March, and up, up and away. Let's look at the Dow. I believe INDU. Oh yeah. Yeah, I'm still getting the hang of the ticker symbols and the stock charts here. But yeah, so the Dow took a little bit bigger of a dip. It sort of had this spike high and hasn't made a new high, and it's down a little bit. So that's kind of interesting. Interesting little divergence there, but all the indexes are always a little bit different, and the Russell 2000 has just been trapped in like this range going all the way back to practically the beginning of the year, right? Like sometime here in January, um, it's just been trapped in this range. So it's definitely since February. But it's within a couple of good days, like one little run like this, and it's at new highs. But it has been sort of choppy, and it is what it is. So anyway, when we had this little dip in the market, let me go back to my SPY chart. This little dip right here, we had a handful of stocks, like maybe 3 open trades that basically pulled back enough to tag their stops. And interestingly enough, we look at the closed trades here. Interestingly enough, I'll just go through them real quick. Let's see, Intel, excuse me, Intel tagged this stop over here. No big deal. And so it was, the trailing stop had moved up to a little bit past the trigger, and so basically it was a wash, right? And so that's kind of the beauty of it. I mean, Intel, look at that 50-day moving average, kind of sloping down there. But anyway, Intel was open for a long time, but that trailing stop slid up, and so when the market sold off, it tagged the trailing stop. The next one was BRKS, same sort of thing. This actually had a nice little ramp up initially, right? And then this trailing stop, I think might be missing one trailing stop there, but yeah, that's part of the idea of the system, is that if the initial stop can get trailed up, somewhere around the entry, and this was actually a little bit minuscule amount below the actual what would have been the entry on this gap up, but no big deal. And let's see, I think those were the only 2 that got knocked out, and so you had a couple that were just knocked out at break even, so not a big deal. Look just to verify. Yeah, so 520 and 521. Those 2 got knocked out essentially at break even. Not a big deal, which leaves us with 6 open trades, right? And so as you can see on the open trades here, a few of the open trades that have been open for a while, and these bottom 2 here have been open for a month now, a little bit over a month, and they're still hanging in there, respectable gains. And the other three of them have really respectable gains. The other 3 are sort of flat, which is no big deal. So, and then the open trade list got condensed by two stocks that basically, got knocked out around break even. So no big deal. So anyway, I thought we would take a look at these and see what they look like here. So as we usually do on the show here, see what this alarm.com looks like. Still a little it's weird, when I put when I put these marks on the chart or whatever. I usually zoom way in so I can get like the trailing stop, right where it belongs. So everything's accurate. And then obviously when I zoom out on the chart or move the chart around, then they get kind of squished. But so you can see what's happening here. Essentially, this is basically just trading flat. Alarm.com just sort of trading flat compared to the entry. And what's kind of nice is that it didn't really get hammered along with some of the other stocks when the market sold off. So far so good. And the initial stop has moved up, so that the trailing stop is just kind of hanging back. It's just far enough under the current prices here that only if this thing kind of really sells off and loses all these levels is it going to get tagged. So quite honestly, it's looking pretty good. Now I've by doing what I did there, I kind of skewed the whole scale of the chart, but yeah, that's a better idea of it. So you got this nice little consolidation going on right under the 50-day, and these two little sort of spike lows here with the lower highs, actually, this is actually a pretty nice looking pattern. Now, obviously, it's going to need a little bit of a push higher to break through that 50-day, and then theoretically, we're looking for it to form like a cup here, and it looks very viable, put it that way. So if I was looking at this now, it would still look completely viable. Basically, we're looking for, a push through this 50-day over 85, and then you got something. Then it can just, you get like a little run like this. You can see, sort of a similar little pattern here with a couple of spike lows and then that little run right there. You actually made a lower low on this side, and you got a higher low over here on this side, and a pretty tight trading range, quite honestly, compared to what this thing usually does. So this consolidation here actually looks sort of constructive to me, and just need a little break over like these previous highs here. You can see that there's resistance just overhead here, but if it can break through that, then it's looking pretty good. So still like the look of alarm.com. Let's see, Pfizer triggered in not that long ago, and Pfizer sort of triggered in on this long range day. Next day gapped up a little bit, and then just one big long range day right there. And then ever since then, it's been in pullback mode, so which is it's a little bit unusual. It's not really that typical to see see a stock hit the target on the same day that it triggers in, but and it pushed far enough through that target that to compensate for the little bit of the gap up there. So that was kind of neat, except for, ideally you'd want to see it, sort of keep going. And I mean, here it pulled all the way back. But, it's looking okay now. And interestingly enough, the initial stop hasn't moved yet, right? This initial stop, this day, the 2 or 3 days after it triggered in, if we had had any forward progress, we hadn't had this retrace, then I'm going to guess that trailing stop would have ratcheted up a little bit more, in which case, it would have gotten knocked out a few days back. But anyway, looking pretty good here. It's basically it had its pullback, right? And now it's starting to head back up, and you had a higher low see, this would have been Friday. So on Friday, and that's when the market kind of took a winger, right? Sold off. You were down a few percent off the highs. Um, so anyway, so far so good on this, right? In theory, it hit the target. Well, it did hit the target, not in theory, but in theory, one would have locked in some profits up here on that big long range day. It's always a good idea to go ahead and I mean, no matter how it happens, if you just want to trade it mechanically, because I mean, look at a day like this. So stocks can act weird. I mean, generally speaking, you get a couple of big long range days like that. You don't expect it to retrace the whole thing, but a lot of times it just take off and keep going. But anyway, trading it mechanically, with the targets and the stops and all that, and is the best way to do it. And that way you won't miss, because occasionally there's days where you get like a crazy intraday move up, and then if you start to get greedy and don't take your, partial profits or whatever, then they can evaporate. So, but anyway, so everything's looking pretty good with this, even though, in theory, it's basically, as of yesterday's close, it was still a little bit below. It was a little bit below the trigger, but percentage-wise, this thing doesn't move a lot, and so it's kind of, I'm not going to say a boring stock, but you don't expect Pfizer to make, like, it's not like the next one we're going to look at, or or I'm sorry, not the next one, but the one after that, Shake Shack, which is moves a lot every single day. So. But anyhow, long story short, Pfizer looking pretty good here. It sort of took its little dip. It's coming back, and I can almost visualize like a cup back up and higher. Although, anything can happen here. It's still sort of range bound too. But so far, so good on Pfizer. Um, CYTK. This one has just basically been choppy since it triggered in on this on a long range day here, right? And then the following day, basically just opened right a little bit above the trigger, and it's just sort of been chopping up and down. Not looking too bad, honestly. You can see that the initial stop, there's the initial stop, was down at the bottom of that long range day, and it's trailed up to, and this actually trailed up a couple of days ago to just under the low of Friday, right? So the system is, I always tell you the trailing stops are a function of price and time. And so quite a bit of time's gone by here. And so the trailing stop is basically, attempting to just use this prior low right here. And it is kind of pivot low too. So it's you had a few days where the lows were higher than that, and then a couple of days with higher lows, and so that is the last pivot candle, pivot bar, and so tucking the stop right up under there reduces the risk. So far, so good. Just needs to get something going to the upside, obviously, and it's basically just trading, right around. It's trading right around the trigger price and the entry, and so, but looking okay. Sometimes these things take time to develop, and we're swing trading. Typically you're looking at sometimes it's a open trade for a week or two, couple of weeks, and sometimes it's a month or even longer. And so these first three, have been opened here in June, and the next three we're going to look at have been open for a while, and they're obviously the ones we're sticking with as winners. So moving on here, Shake Shack, looking pretty good here. So it triggered in, traded sideways for a little bit, had a kind of a big run up for a couple of days, hit the target, compensation target. It was kind of, seems like it's struggling with this 50-day moving average, which is sloping down, but nevertheless, longer term, the stock was in a nice uptrend. Then it took sort of a big dip, and then we're catching the upswing here. Sometimes having this 50-day moving average on the chart throws you off a little bit, right? That's the thing about moving averages is, well, in any indicator, right? Typically, and I just put this on here the other day because to look and see how the S&P was acting around the 50-day. Typically, I let's see if whoops, I can't remove it just like that. So if I want to remove this 50-day, whoops, here we go. 50-day moving average. Let me trash that. Yeah, there we go. That way it's not affecting like what I see on the chart, right? So yeah, people use all different sorts of moving averages, and they can be useful. But I mean, just because that 50-day moving average is, kind of looks like it's acting as resistance, doesn't necessarily mean a whole lot. So it did manage to break through it over here and then kind of push back below it. But so, here's one that hit the target already. The trailing stop is above the entry. And so everything looking good. As of yesterday's close, I mean, it doesn't really look like a whole lot, but as of yesterday's close, it was up. It closed 7% higher than the trigger price. And of course, that doesn't take into account the idea of taking profits at target, which was, right around 10%. Roughly it was 10% from the actual trigger to the target. Add a little bit for the compensation target, so that would have been, about 9% up there. And so, I mean, when you're looking at the open trades, it's not taking into account the idea that we've already taken some profits off the table. And so now, I mean, ideally, a new uptrend has started, and I could draw a trend line across all these lows here, or just even across these two lows. And ideally, this is going to work its way back up. And notice it did actually close the gap here. So, but so far so good. And this trailing stop here at 91.50. Now I'm going to go ahead and try and extend this thing. See what happens here. There we go. It's a little, and then I have to save it. If I forget to save it, then that's like one of the biggest things with this platform that I'm using is man, if you change anything and then forget to save it and type in a different ticker symbol, it's gone. So anyhow, so far so good on this. There we go. And again, you got like nice little pullback, pivot low on Monday, a couple days ago, pulled back, pivot low, and now it's starting to come up. And so that trailing stop looks like it's in a pretty good spot, even though the trailing stop moved up like last week. So it's just kind of staying right where it is, which basically allowed the stock to have a normal sort of pullback without getting knocked out. And I always say that that's sort of the purpose. Well, that's the way that trailing stops are designed ideally. And this is actually a good example of something that's ideal, is that, the stock can have like, a rally or a consolidation and a little bit of a pullback and not get knocked out of the trade on a normal pullback. And then here you go. It's starting to come back up a little bit and trailing stops a little bit over break even, which is also ideal. Well, it's right at break even. So everything about this is looking good. This is almost sort of the poster child for how everything's supposed to work, right? The only thing I don't have on here is the initial stop, because when I originally marked it up, I must have forgotten to save it. I don't think, the initial stop would have been, down here somewhere around, 80, 82 or something. So, but anyway, so far so good on that. The next two actually looking really good. So this is what they look like when they really work, right? So triggered in over here, ran straight up to the targets, little bit of a dip over here. That's just a little bit of a retrenchment and a little sideways consolidation, and then the next leg up, and as we speak, pulling away. And so this is what they look like. And of course, this thing's been open for, roughly a month now. And so that's kind of the idea. And you can see that trailing stop is right up under this last pivot low too. So right up under the last pivot low. So, $9.50 higher than the trigger. So far, so good. And obviously, the idea is that we want to stick with the winners, and like those couple that got, stopped out break even or whatever, cut your loser short. And when you look through the close trades, you'll see that, that generally speaking, if a trade's open for a while, that trailing stop's going to move up, move up, move up, and then ideally it gets to around break even, and everybody's entry is going to be a little bit different, so we don't sweat the small stuff. This system was completely designed to avoid having to spend a whole lot of time and sweat the small stuff and avoid the stress and all that. And so over time, like the old saying goes, the winners, if you cut your losers short, the winners take care of themselves, right? And so that's basically, I wrote a blog post like last year, and it was all about all these steadfast rules of swing trading or investing or whatever that have been around forever, and how our system was designed, or just, it's just completely consistent with all these old sort of rules, about taking profits, moving your stops, not letting winners turn into losers, all that kind of stuff. Cutting your losers short, letting your winners run. So this is a good example of letting your winners run. And you can see that we're on the upswing here. Nice consolidation breakout. And so now we're breaking out of this range right here. And so this thing could keep going and really turn into something. It was yesterday's close. It was up about 12% from trigger price. Looking good. Last but not least is Twitter, right? And quite frankly, when we had all these, when we had a bunch of stocks start triggering in, I wouldn't really have expected Twitter to be the big gainer of the big gainer of the bunch, especially sort of coming off of that gap down on earnings. But it's closed the gap now. Obviously, it's up a couple of percent today, and I mean you can see it here. It's on the upswing just like the previous one, only it's really got something going to the upside. Right? So here was the trigger back over here. There was the initial stop down near the low of the pattern. This gap right here was the last time they released earnings, and got a little sell down, and that sell down ended, and you can see I have a bottom panel here that I'll pull up so you can see that on the chart there. See how this is the RSI. See how the RSI got really sold down. So below 30 when the thing bottomed out, and then RSI came back up over 30, right near where it was starting to trigger in there. So, and I'm sure if I had a MACD and a stochastic on there and all that good stuff, that they would kind of line up to with that little bottom. But no, I mean, it's a nice bottoming pattern. So zoom out on this chart a little bit. It's actually on a pretty amazing run right here, considering. Um, but I mean, look at some of these other runs, right? This this run it went on here was extremely dramatic. I mean, the stock practically doubled right there with just sort of barely looking back. One crazy sort of day in the middle of it, but um, the longer term trend on this, you can see like these lows, each one of these lows right here. Um, and here, this one looks like another earnings gap down, and then it hit a low and made a huge move. Another big sell-off, huge move, and so if I drew a longer trend line on this, then sorry about that, my cell phone ringing. You would see that this was a pretty good low right here, right? So maybe I should pull up a weekly chart, but anyway, that's basically it. So far, so good. Thing making a really nice move and sticking with it. And then in theory, this trailing stop, it's in a pretty good spot right now, right? Like you got, it could move up just a little bit from where it is right now, but not much. So let's see these lows right here. Like this low is 59.53. This low's 59.53, and this low's 59.74. And so theoretically, like this stop could move up just a little bit, maybe to right under 3 days ago. But and I don't know. I mean, for all I know, this thing's going to slide up under yesterday's low, but typically it's gonna hang back like sort of under the last. There's still the last pivot low right there, and we got this. But here's something else, and so this is what, like, the system, obviously is programmed to do different things, and so sometimes when you get sort of like a parabolic move like we've seen here, we might see a parabolic stop kick in, which would likely be under today's low, or we could see the actual trailing stop move up. So it's not likely that anything needs to be done immediately. So it'll be interesting to see if this trailing stop changes tonight after the update tonight. And and by the way, if any of you guys noticed, last night Jeffrey had some issues with his power being out. I guess they're doing some work or whatever, and so we didn't get the update until this morning. So kind of rare. It happens a few times a year, I'd say. A few days a year. Something weird will happen. Somebody's internet will go out, or we'll have some issues on the server, or any number of things. And geez, over the years, I got all kinds of crazy stories about, my cable being messed up and stuff with the telephone pole. They replaced the telephone pole that powers my house like earlier this year, but over the years, you just have this weird kind of stuff. And so anyway, a few times a year you might notice that the update doesn't come until the morning. So that's what happened last night. But anyway, so that's it. So we have the 6 open trades. This one's been open the longest. As of yesterday's close, it was up around 19%, and it's up a couple more percent today. So looking really good. Closed the gap and everything. And so the idea is that, want to have enough leeway here so that, it can have a normal pullback without getting knocked out. And so that would be my guess. My guess is we're looking at like a parabolic stop kicking in at some point, maybe soon if we get continued upside. And then, if we get a little bit of a pullback and form another higher pivot low, then this trailing stop will move up then. But so far, so good. And that's basically it. That's the 6 trades we got. Now we do have we got some pending trades starting to build up here. Let me look at that list. Yeah, so you guys can check that out on your own. There's 4 pending trades, and I haven't looked at the charts of those yet. I've looked at a couple of them, but I haven't looked at them this morning to see how close they are to triggering in. But you can take a look at those. And so typically I like to go through and look at the open trades unless there's nothing to see with the open trades really, in which case we can go over the pending trades and see what they look like. But right now everything seems to be going pretty good. So I would say all in all that we weathered that little sell-off pretty well, with 2 of the open trades getting closed roughly at break even. Can't complain about that. And then the open trades we have now, you got the newer ones kind of hanging in there, and the ones that have been open for a while doing, I would say, pretty well. And so that's that. So anyway, thanks for tuning in, and I will see you guys back here, same time, same place next week.